Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to dive in and look at 3 monthly dividend companies. These 3 dividend companies are solid companies in my opinion, and if you're looking for that monthly income, look no further than these 3 companies. Is now the time to buy these companies? So I want you to enjoy this video. Sit back, grab your favorite drink, and do me a favor, hit that like button, hit that subscribe button if you haven't done so. Don't forget to hit the notification bell so you don't miss out on videos that I put out. As always, please remember that all of this is not financial advice. This is just me sharing. With that out of the way, let's take a look at these dividend companies and see if these companies have a place in your dividend portfolio. So the first one I want to talk about is Main Street Capital. The ticker symbol is MAIN. This is a company that is a principal investment firm that provides long-term debt and equity capital to lower middle market companies. So if you go to their website, you can see some of their investor relations. You can see per share dividend, capital under management, and then you can also see some more information in there. Now if you go to some more of their presentation, you want to look at the portfolio. So in Main Street Capital has the percentage of the portfolio by industry. You can see machinery, tobacco, computer, IT, healthcare providing, media, hotels, and household products. You can see from there. And then if you go a little bit more, you can see more information in the geography and all these other things. So definitely, if you're interested, go to their website and take a look at that. Switching over to Simply Safe Dividend, based on their dividend safety score, they're rated at 62, which is safe. The market cap is mid cap, and then the dividend yield is 6.71. Now looking at the key metrics, you can see payout ratio is about high, which is 73, which is low. And then your forward payout ratio is about 70. Dividend streak of 15 years without a reduction. During the recession, they maintained their dividend. So the dividend growth is pretty slow. Last 10 years, about 4%. Last 5 years, 3%. And then you got your latest, which is 2%. What I like about this thing is the monthly dividend. So 15 years without a reduction, 12 years consecutive. And again, you see you get paid monthly. Annual payout ratio is about $2.76. Ex-dividend date is 7. And then your payout ratio is 15. And then if you look a little bit more, they do special payouts, as you can see from here. Looking at the dividend yield, you can see right here, forward PE ratio, and then your forward PE ratio is about 10, which is kind of similar to the financials. It's closer to the high of 45. And then if you look at the financials, you can see payout ratios right here. Last 12 months, it's at 70. Forward payout ratio, see right there. And then earnings per share, free cash flow per share, and then you got your sales growth, and then outstanding shares outstanding, which is 76, and then total sales is 418. Return on equity is at 13 the last 12 months, and then return on investment capital is 9 the last 12 months. Now looking over to Motley Fool, so what I wanted to do is take a look at it versus the S&P. You can see the performance right here, and then the 5-year performance, 5-year annualized, and then since the IPO, which is right there. Moving along to Seeking Alpha, based on their dividend scoreboard, you can see right here, and then the dividend summary right here, 5-year growth of 3%, dividend growth the last 2 years, payment ratio 73, and then moving along to the dividend grid, you can see right here. Switching along now to tip ranks, and based on their analysis, they rated as a 9. consensus says a strong buy, and then you can see right here hedge funds have decreased their shares, and then you can see the 5-year return is about 50%. So the next one I want to talk about is Stag Industrial. The ticker symbol is STAG, and is a real estate investment trust that focus on the acquisition and operation of industrial properties. So if you look down into the information, you can see the enterprise value, number of states, and then the buildings, and then you can see a little bit more of where they're located at. Now moving along to Simply Safe Dividend. Based on their dividend safety score, they rated as 45, which is borderline safe. You can see the dividend yield is about 3.87. Moving along to the payout ratio, 76, which is a little bit high on industrial REIT. Forward payout ratio 75. Dividend streak of 11 years without a reduction. Again, pretty slow in the dividend growth. Last 10 years about 3, last 5 years about 1, and then you got your latest, which is 0.7. Dividend streak of 11 years and a consecutive 11 years. Again, what I like about this company is you pay monthly, and then your annual payout per share is about $1.47, which comes out about 12 cents. You can see from here. Looking at the dividend yield, you can see 5-year, it's below the 5-year, and then you can see 52-week price range is closer to the high, and then your ratio is 19 versus the real estate of 14. Looking down more to the payout ratio, and then you got your payout ratio right here. Free cash flow per share, adjusted FF per share, sales growth, total sales in million, outstanding millions, return on equity, and then return on investment capital. So now if we move over to monthly full, you can see the 1-year performance, and then your 5-year performance, 5-year annualized, and then since the IOP. Now taking a look at Seeking Alpha based on their scoreboard, and it's right here. You can see dividend consistency of A, dividend yield of C, growth is a C, and then safety is a B. Looking at the 5-year growth rate of 0.7, and then dividend growth 10 years, payout ratio is about 65. And then moving along now to tip ranks, based on their smart card, they're rated as an 8. Analysis consensus of strong buy. Hedge funds have increased their shares in the last quarter, and then you can see the 5-year growth of 76%. And the last one I want to talk about is Realty Income. The ticker symbol is O. This is a real estate company which engages in generating dependable monthly cash dividends from a consistent and predictable level of cash flows from operation. So this is definitely one of my favorite companies. And then if you look at the dividend safety score, they rate it as 80, which is safe. Dividend yield of 5%, and then you got your large market cap. And then moving along to the key metrics, you can see payout ratio 76, forward payout ratio 76. They have increased their dividends, and then dividend streak of 54 years without a reduction. The dividend growth, again, pretty slow, but again, these are companies that pay monthly. They're also REITs. You can see right here, uninterrupted dividend streak, 54 years without a reduction. Dividend growth of 28 increases as well, and then you get paid monthly. Payout ratio is about $3.07 per share, and then you can see the dividend yield higher than the 5-year average, and then you got your 52-week range right here, and then your ratio comparison. Looking at more information right here, you can see sales growth, total sales, outstanding sales, return on equity, and return on investment capital. And then moving along to monthly full, you can see based on the S&P 500, 5-year return, 1-year return, and then the 5-year annualized. Yeah. And then going now to seeking alpha based on their dividend safety score, you can see right here, dividend safety of B, growth of B plus, and then you can see the 5-year growth of 3%, dividend growth 2 years, and then you can see right here grade level. So I like these things consistently, good scores in my opinion. Following along now to tip ranks. So you can see based on their smart score, they rated as a 7. Consensus rated as strong buy. Hedge funds have increased their shares in the last quarter, you can see. And then your 5-year return of 41%. All right, guys. Those are 3 great dividend companies that if you're looking for a monthly dividend company, these are great companies you want to definitely check on. As always, please do your research. And also do me a favor and check out the other videos as well. Stay cool, keep investing, guys, and definitely catch me on the next video, right? All right, take care. Aloha.